Hello and welcome to this web extra edition of WealthTrack. I'm Consuelo Mack. I'm delighted to be joined by legendary value investor Bill Miller, Chairman and Chief Investment Officer of Miller Value Partners, an independent investment advisory firm that he launched in 2016 after acquiring his money management firm from his longtime employer, Legg Mason. Now, Bill, of course, is the only mutual fund manager to have beaten the S&P 500 for 15 years running. He did that from 1999 to 2005. And one of his two major current funds, the Miller Opportunity Trust, which he launched in 1999, was the number one ranked U.S. stock mutual fund in the 5 years ending 2016. He also runs a hedge fund, which is why I'm talking to him today, MVP One Hedge Fund, which was an early investor in Bitcoin. And Bill, I've known you for a long time. You never cease to surprise me in what you own. And I'm trying to reconcile you as a value investor and a Bitcoin investor. So for the record, when did you start buying Bitcoin, and what's your average price?
I started buying it in 2014, maybe 2015.
Several years ago.
Several years ago, yeah. And my average cost is around $350, and I've paid below $200 for some and paid above $500 for others, but the average is around $350.
What attracted you to Bitcoin in the beginning, and especially, again, I'm considering you as a value investor?
Well, it's funny, Consuelo. I'll answer that directly, but I'll go back and just recall the fact that when I was buying Amazon stock at a fraction of today's price back after it came public, I think on the front page of the Wall Street Journal, my friend Harvey Eisen said I must have been drunk when I thought that Amazon was a value, and the same with Google. I actually have a presentation that I gave where I toted up all the things that people were saying about Google when it came public, most of which were that it was that it shouldn't be bought, that it was just a commodity item, it was technologically going to be superseded, et cetera, et cetera, et cetera. So I think one of the things that we've tried to do in our shop is try and have an open mind especially about new technologies and new ways of doing things. Most of them don't work, and so they're, from a probabilistic standpoint, you have to kind of believe that when you're looking at those sorts of things, A, you have a high probability of being wrong, and B, even if you have confidence in it, it's likely not going to work. So it's really a question of assessing risk and reward on an individual case-by-case basis. So with Bitcoin, I was probably aware of it. Well, I certainly was aware of it before I started buying it, but didn't really take it too seriously. Just thought it was an interesting experiment, which in many ways it still is, although it's a much different experiment right now than it was, when it traded at it was 10 cents, I think, in 2010. But what attracted me to it was I read a book by Nathaniel Popper called Digital Gold, which is a history of the kind of the Bitcoin phenomenon, and it had like many histories for new things, a very colorful history. But it was interesting to me that people that I had a high regard for in the venture capital world took it very seriously. And so, for example, people like Mark Andreessen, Fred Wilson, New York Venture, and so that caught my attention, and I decided to do a lot more work on it. And as I did the work on it, it became clear to me that, in fact, I got interested enough in it that at the Santa Fe Institute, where I think I was chairman for many years and on the board for 25 years, I actually funded a workshop called Money, Past, Present, and Future, which we had archaeologists, sociologists, technologists, cryptographers, all kinds of obviously economists, monetary economists, and the topic was money, past, present, and future. So trying to look at really how money arose, what its history has been, how it's been used, what types of things have counted as money, and I think it was after that conference that I finally figured out Bitcoin, at least to my satisfaction, in terms of beginning to invest in it. And
what did you learn, Bill? At that conference, Money, Past, Present, and Future, that convinced you that Bitcoin had a future?
First of all, it had passed through its, I'd say, stages of greatest risk. So when it came out, it came out at pennies, and then it was probably trading. Well, I want to say it might have been trading somewhere in the $400 or $500 range at that point in time. So it had risen quite remarkably, and that that in itself caught my attention. It's something which was so A, controversial, and B, difficult to wrap one's arms around, at least initially, could have gone up that much, could have attracted that much attention, and especially, as I said, the venture capital folks who I began to pay attention to on it. And I guess the thing that struck me on it was twofold. Number one, there really hasn't been any technological innovation in money ever. And so, we've had stages along the way where you went from, money being in various societies around the world, everything from rocks to jewels to gold and silver. But by and large, money was a tangible thing. And then governments began issuing, fiat currencies, but they were always backed by something tangible. And then Bitcoin, of course, is very, very different because it's a technological innovation. It's really just a piece of software, and it's a technological innovation that is uncorrelated as a potential asset with anything else. So it doesn't really matter what the Fed's doing. It doesn't matter what a government is doing. It doesn't matter what's going on politically or geopolitically. Bitcoin's value is going to be set by people in a free and open market who decide what it's worth. So, and that's a very interesting innovation. And there's a book by the philosopher John Searle called The Social Construction of Reality, where he deals with this kind of thing. Like, where do these things come from? Like, where does marriage come from, for example? It's not something that exists out in the world. We made it up on our own, and it's a very powerful institution. And Bitcoin, I think, when I began to get into it, it struck me that the still unknown creator of the white paper that led to Bitcoin, Satoshi Nakamoto, who may be one person or who may be a group of people, but he referred in the white paper, I think, to Bitcoin as digital gold about 6 or 7 times, and so in thinking about that, gold is something that it's, as people say, it's an asset that's no one else's liability, and so governments don't control it, and it trades freely, but it's the kind of thing that has a lot of problems with respect to functioning as a currency, for example. That is to say, it's hard to transport. Just for one thing, it's not infinitely divisible in any reasonable way. And Bitcoin solves all of those problems. And so when at the conference that I mentioned, I'd say the thing that kind of pushed me over the edge was there's one of the more thoughtful people who presented there was a guy named Wences Casares, who is the CEO and founder of a firm called Xapo, XAPO, which is a digital wallet, a digital holder for Bitcoin, and a custodian. And one of the things that he said was, Bitcoin might not have any evident value. It may be a tough thing to understand if you live in the United States. He said, but I'm from Argentina, and he said my family's been in Argentina over 100 years. And he said, and the government has taken all of our money away and bankrupted us 3 separate times over that time, seizing bank deposits, inflating us twice out of existence in terms of that. And he said, so Bitcoin is a way around that. Governments can't control it; they can't seize it. It can be sent instantaneously. And again, at the time, Bitcoin was getting some attention. And one of the things that Wences said that I think probably kicked me over the edge on it was he said, look, the stupidest thing anybody could ever do would be to put more money in Bitcoin than they could afford to lose 100% of. He said, because there's a non-trivial chance that it goes to zero. And he said, the second stupidest thing you could ever do is own no Bitcoin whatsoever. He said, because there's also a non-trivial chance that the time was, in the hundreds, he said, it can go to 1,000, it can go to 5,000, 10,000, 50,000, 100,000, even $1 million per Bitcoin. And so he said, my advice to people that are interested is, he said, put 1% of your liquid net worth in Bitcoin. He said, you can afford to lose 1%. I mean, stock market will go down 1% in a day. And he said, and then forget about it, and do not trade it, and do not do anything with it, and it'll be worth zero or it'll be worth a lot. And that, I found that an interesting proposition, especially in light of what the venture capital money that was going into it. And so that's what started me. And my son also bought, a reasonable amount at the time as well.
Does it trade freely? I mean, it seems that it's okay. But I mean, it's So you tell me. I mean, how liquid is it? How easy is it to buy? And I know you told me
it's cumbersome to buy. It's much easier today now that Bitcoin futures launched yesterday, and that I think is also part of the path to Bitcoin respectability, which is you now have, the CBOE and the CME. CBOE started yesterday, and CME is going to start soon trading Bitcoin futures. Cash settled futures. Margin requirements are reasonably stiff at around 30%, but it eliminates the big problem with Bitcoin, which is you have to store it somewhere before futures trading started, and that requires a public key and a private key, and it requires paying storage costs just like you would with gold. And also, if one of the places where you have it stored, especially if the Bitcoin exchange gets hacked and you lose your Bitcoin, you can't recover it. So it's gone. It's gone forever. So that's a downside. With futures, that you eliminate that problem, right? Because it's going to be settled in a market, and it can't be stolen. That's the first step towards respectability. The next one will be Bitcoin ETFs, which will require SEC approval. They turned it down about 2 years ago, I guess it was, and said there was insufficient safeguards and regulatory apparatus around it. But those will come, I would guess, probably in the next year or two, especially as these futures get going. One of the things that kicked off the big move in Bitcoin this year was when Japan, in February, announced that Bitcoin would be legal tender in Japan, and they put out licensing requirements for exchanges to make them, fully regulated. And that was a very important point in time, and that sent Bitcoin up considerably. And I think that's now what we're seeing with the rise in price. Is people looking at this thing and saying, well, if there's about $7.5 trillion of value in gold held today around the world, and Bitcoin's market cap right now is around $290 billion. Mm-hmm. So if Bitcoin just got to be 10% of gold, that would be $800 billion, and that would be almost 3 times your money from here, 2.5 times your money from here. And again, that's just one measure of what Bitcoin can do, because it also is a threat. There's a very interesting paper that Susan Athey at Stanford wrote several years ago on Bitcoin, and this is when Bitcoin was, I'd say, mostly the territory of I'd say the anti-Fed people, anti-government libertarians, and who liked it because it wasn't under any kind of government control. And they were talking about, the ideologues were talking about Bitcoin replacing various currencies around the world and becoming the global currency. And one of the points that she made, she's a monetary economist, she said, well, look, Bitcoin is not going to replace the dollar, it's not going to replace the yen, not going to replace the pound, it's not going to replace any of the reserve currencies. She said, however, that's only 5. And she says there's hundreds of currencies around the world, and it is a threat to all those, because if you live in Venezuela, Nigeria, you want a safe and secure store of value and something that the government can't confiscate. And so I think that's a huge potential size. Interestingly enough, I'm going on probably more long-windedly than you would like me to, but
no, this is fascinating. So I keep going.
Okay, so I think it was just the other day that Bitcoin. The value of Bitcoin equals the amount of Australian dollars in circulation. So it's already bypassed Australia in terms of the amount of the actual currency that's circulating. So there's about 270 billion, I think, of Australian, coins and cash and currency floating around, and Bitcoin's about 85 or 90 billion right now. So it's the 17th largest, if you consider it a currency. It's the 17th largest in the world already, and that's quite remarkable for something that didn't exist, 10 years ago.
It is remarkable. It's someone that Richard Silla, who is a financial historian and formerly at the NYU Stern School of Business, a Hamilton scholar. I talked to him the other day on a webcast for WealthTrack, and he said it's a speculative bubble, and that this is typical of what happens as markets are approaching tops, that something kind of comes out of nowhere. And I'm thinking about, you were quoted in the Wall Street Journal not too many weeks ago saying, I think when Bitcoin then was trading at 6,100, saying that you wouldn't buy it today at that level. I mean, what do you think about it now?
No, what I said was I was not buying it. I'm not sure how they quoted it. I said okay. I wasn't buying it now, but if I did not own it, I would buy it. I'd buy a 1% position in it that day. And I would do the same thing today. I think what's interesting to me about whether it be Dick's comments or I wrote for the hedge fund a shareholder letter on Bitcoin at the end of September, and we changed it a little bit and to make it a little more ecumenical, and it's on the website right now. And so I think if you go to Miller Value Partners and go to our website and look at the blog post that I posted on Bitcoin. So what's interesting and what I point out there, and I think this is maybe the salient point, is in the past, since Bitcoin's had this almost parabolic move in the past few months, in the third quarter you had a quite remarkable number of people come out and dump on it, right? Jamie Dimon said it was he called it a Ponzi scheme, or somebody called it a Ponzi scheme. Jamie said he would fire anybody that did it. It was it was worthless. Buffett called it a mirage. Larry Fink said it was an index of money laundering. Paul Krugman said it was evil. You had all of these people coming out and dumping on Bitcoin, and I am highly confident to say that not one of them has actually studied it carefully. That is to say that they have strong opinions about something that they haven't really looked at, and which is brand new. And the thing that I find most telling and interesting about that is that, so far anyway, I have not found, and again, I try and read pretty widely on this topic. I have not found a single venture capitalist of any repute who has dumped on Bitcoin. That is to say, the people that are dumping on it are people that are unfamiliar with the technology. Don't, as with Buffett, claims not to know anything about technology, and yet they have a strong opinion about what is a brand new technology, and based on I'm not quite sure what. And I think it's interesting that the people whose livelihood depends on assessing new technologies not only haven't dumped on it, that they've enthusiastically embraced it. So I think there's a big gap between I think the great line from Mark Andreessen, where he said, when somebody asked Mark what he thought about Buffett calling Bitcoin a mirage, he said, this is almost an exact quote, he said, the record of old white men who don't understand technology crapping on technologies they don't understand is 100%. And so I think that's there's a big divide there, let's just say. I think also that people have, in many cases, when they talk about, I've heard several prominent economists make comments. Well, this isn't a currency because it can't. It's almost never used for transactions, and it would be stupid. Its volatility makes it such that it really can't be considered a currency. And that just to me is kind of, again, not thinking through things carefully, because I don't know, what was the German mark in 1923 a currency or wasn't it? Well, right. It got inflated to zero, right? But it was a currency. It was highly volatile. It just went down every single day. Same with the Venezuelan currency. So the fact that a currency can be highly volatile doesn't mean it can't function as a currency. It might mean that it's a very bad currency. But and it would be crazy to if for somebody, in my opinion, to transact in Bitcoin with the current price action in it, because it could be, or you would never borrow Bitcoin with its history of going from 10 cents to $17,000, because you'd be bankrupt if you tried to pay it back. So there are things where I think the idealization of it as unit of account, store of value, et cetera. All of that stuff is true. It just doesn't function well, any of those domains, except so far as a store of value.
Right. So a couple of more questions, Bill. So to the point made of that you would buy it up to 1% of your liquid assets if you're individual or whatever. Well, in your hedge fund MVP1, it's a lot more than 1% of its assets. I don't know where it is, just because the run-up has been so phenomenal.
It's just about 50% right now.
50% right now. So what do you do, as a portfolio manager with an oversized position like that? I mean, have you ever had one asset class, or is it one asset in this case, at 50% of any of your portfolios that you've run for investors and yourself?
We actually had not 50%, but we actually had at one point 20% America Online. I think we had close to 20 in Dell and 10 in Fannie Mae, so close to 50 and maybe 3 names back in the 90s.
At 50% of your hedge fund, that's a pretty oversized position by anyone's standards. So, what do you do?
Well, it's a nice problem to have. We started out as a 5% position, and it's gone up so much. It's 50% of the hedge fund right now. And I think what we're studying are ways in which we can mitigate the risk to the overall fund and the portfolio, while still allowing the investors in the fund to have a choice about how they want their particular investment in Bitcoin handled. So we're studying ways to do that right now, and I think we have a way, but we're not quite ready to disclose it. But I'd be fairly confident in saying that it won't be 50% of the fund for that much longer, which does not mean necessarily that we're going to be selling it. So
You're working on
path down
how to handle it.
How to handle it, yes, without selling it, yes.
Gotcha. Oh, that is a very important point to make, how to handle it without selling it. Question about other cryptocurrencies. They're being, minted daily. There's a whole kind of industry, in storage and being, built around Bitcoin and other cryptocurrencies. Are you contemplating or are you investing in other cryptocurrencies as well, and in the kind of the business that's surrounding these digital currencies?
In the short term, no. We have Bitcoin Cash, which is kind of like a dividend from Bitcoin, and that's also in the fund. But we haven't purchased anything other than Bitcoin for a variety of reasons. One of the things that has informed my thinking on this is the work of Brian Arthur, formerly of that Stanford and Santa Fe Institute, who has done some of the I'd say most creative work on the nature of technology. And he identified basically the point that Brian makes is that almost all technologies have a certain monopolistic aspect to them, the ones that succeed, and so they reach a point of what he calls lock-in and path dependence, and that can take a while to reach that. It can take years to reach that, but once they do, then the market shares become highly stable and predictable. And so, for example, Microsoft's market share of operating systems, Intel's market share of chips, that lock-in occurs when the market share of the technology in question goes over 50% and stays there. And Bitcoin's market share, what's interesting about it is it was over 90% maybe 2 years ago, and then Ethereum came along, and now all these other cryptocurrencies have come along. And at one point earlier in the year, Bitcoin's market share fell to around 30-some percent, 35%, I guess it was. And now it's risen back up to be close to 70%. And so that, I think, is part of the way we're thinking about this, is that it's really not necessary to take a broad view of these new technologies unless one just wants to do that. Because if you're at a point of lock-in, then Bitcoin, if this stuff works, then Bitcoin will be the coin of choice, just like what happened with VHS and Betamax, or with the QWERTY keyboard, for example. So I think that's another thing to consider with Bitcoin. Now, I'm not ruling out that we would do that, but so far we haven't done anything with them. Most of those cryptocurrencies, by the way, if monetary history is any guide, will be worthless. And just as we had a period of free banking in the United States from the 1830s to the 1860s, and every bank could issue its own currency. And virtually all of those became worthless, and as they should have. And these ICOs are in many cases even worse than that, because they are not. One of the things that's I think impeding the SEC in regulating these initial coin offerings, all these new cryptocurrencies, is that these things do not allow you. These ICOs, they don't represent ownership in anything. So somebody who actually raised a significant amount of money in an ICO said it was like making a contribution to the Salvation Army. You're doing it because you want to support the effort that's underway. And so there's no requirement that the people that issue these things, that they do anything with them. They go out and buy boats or go on a vacation. So I think it's a highly risky space. But within that space, there are likely to be things that that work out well. My son has been pitching me on one that I won't mention, which is going to come do an ICO in about a month. And he says it's the first one that he's looked at that he thinks is investable. So we'll see.
How high risk is Bitcoin at these levels?
Well, I think that I would go back and just reiterate what Wentz has said, in the sense of I wouldn't have any more money in Bitcoin than I was willing to lose 100% of. I think that the chances of it being ultimately worthless are far, far below what they were several years ago, because you're building up an entire ecosystem certainly in the venture space where significant amounts of money are invested in these kinds of in blockchain technologies of one sort or another. And I also think that there will be various offshoots of Bitcoin. Some of these cryptocurrencies will probably turn out to be worth something, but I would say, maybe more realistically, look, Bitcoin's gone down more than 50% several times. When the Mt. Gox exchange was hacked, Bitcoin was $1,200 and it fell to $200, and then of course it rallied from there, and it's up where it is right now. But I think that or look at the Nasdaq, for example. I mean, Amazon went down 95% from 1999 to 2002. Even if you bought it at the high, you still did really well if you held it since 1999. And so I think that's one of the things that some people speak about in the crypto assets community, especially with respect to Bitcoin, is they call themselves hodlers, but it's pronounced holders, meaning you buy Bitcoin and you hold on for dear life. But if you try and trade it, you're likely to get traded. You're likely to trade yourself right out of it. So I think that's just some different random thoughts on it.
Bill Miller, it's always a treat to talk to you, and this is a fascinating topic. And congratulations on how your Bitcoin holdings have appreciated so far, and we'll see what happens. But it's always a treat to have you, and I'll tell our audience that you will be on WealthTrack, the television program on public television, in January, and we'll talk about see where Bitcoin is at that point, and we'll talk about a lot of other investment topics as well. So thanks very much for joining us, Bill.
Okay, great, Consuelo. Thanks for having me.
So this has been Bill Miller, Chairman and Chief Investment Officer of Miller Value Partners, and also portfolio manager of the hedge fund MVP1, which is a very sizable owner of Bitcoin. Thanks so much for joining us, and make the week ahead a profitable and a productive one.